Hello, Maverick traders. Welcome out to your market roundup for November 8th. Corey here with you. Quick reminder to make sure you follow your trading plan. Markets had quite a day today. There was quite a bit of news hitting it in regard to crypto markets, some stress in that market, but the markets handled it relatively well. I mean, we were up about 1% in the Dow, the S&P and NASDAQ up about 0.5%. Russell, the small caps, basically flat. Oil had a rough day, down 2.8, but gold flourished at +2 and probably helped the gold and precious metal market to have that problem in the crypto markets. That probably fueled a little bit of help towards gold and silver and such. Advancers versus decliners, about 60% of stocks going up, 40% going down, so more bullish than bearish, and about even on the 50-day moving average. We're in kind of a sideways environment right now. So again, the news today was the crypto markets really getting hammered. Bitcoin down, close to 20%, and the news was that FTX needs a bailout, and Binance is stepping in to buy their European operations and such. I think FTX gets 95% of their revenue or something like that from that asset, so they certainly don't want to be dumping that. Seems to be a liquidity crunch and a crisis there. Now, midterm elections are taking place now. The expectations right now are that the House is going to be won by the Republicans, and that's more of something that the markets would cheer on. Generally speaking, a stock market likes for Democrats to have partial control and Republicans to have partial control. When one group has complete control over the House, the Senate, and the presidency, that's usually a little bit worse for markets. So some checks and balances there. And that seems to be, although it can change, seems to be the path we're moving towards. So the S&P, here's my take. We've talked for a few weeks about choppy trading, that you fast forward a couple of weeks and you probably haven't done much. Actually, I'd give the market some real credit. Even though we're basically flat for the past few weeks, think about it this way. If you had told me that Apple, Google, Amazon, Microsoft, Tesla, Facebook, Meta, these stocks would all be down as much as they are, there's no way I would have said the market's holding up this well. No way. Those are the biggest market cap weighted stocks in the S&P. So what this tells you is that most stocks are doing well, even though those big, massive, large cap tech names are really, really taking it on the chin of late. And that's a good sign for the markets. If those stocks start to bounce back, even if they just correct back up for a period of time, catch a little bit in Amazon, Google, Apple, and so on, and these other stocks keep going, and I think you get an extension of this correction, which is ultimately what I expect. My upside target is thinking we get another 5% or so upside. Another way to think about this is maybe make a list. What do you think is bullish and what do you think is bearish about the markets? Well, that's a little tricky because it depends on your time horizon. Short term, I think the charts are a little bit more bullish. Long term, I think the charts are a little bit more bearish. Fundamentals, earnings results, and so on. In the short term, I think it's a little bit more bullish. Maybe earnings have done better than most have expected or worried that they would. But in the long term, I think there's some real headwinds. I think interest rates, are more of a bearish factor for companies and economies and so on. And the Fed is going to continue to raise those even if it slows a little bit. So, there are some things for both. I would put sentiment as being a little bit more bullish in the short term because people are so negative. People, especially post-Fed meeting, I mean, the amount of pessimism on the Fed meeting was palpable, where people were just saying, oh, the Fed, they're going to kill this thing. This is bad for stocks, get out, and so on. And the market's basically flat from that Fed meeting. That's, again, impressive given the downside deterioration in those large cap stocks. So I think in the short term, things are setting up for a little bit more rally, but I would agree that in the long term, there's some real significant headwinds. Inflation, we get a CPI number this week. Inflation's weird because people, obviously it gets reported month over month, but it's a cumulative. It's kind of like a moving average. If you add up all the monthly numbers, it gives you your annualized CPI. And the reason that's going to stay too high right now is because 9 months ago, 8 months ago, 10 months ago, we were seeing CPI numbers that were 1% month over month. And so when you add those into the 1 year number, well, the CPI annually is really high. What we need is time. Over time, the CPI is going to come down because I think we'll start to get inputs where the monthly number will be 0.4 and we're getting rid of a 1.1. And then the next month's number is 0.3 and we're getting rid of a 1.2. And so I think we're going to shed some of the high numbers and add some lower numbers, but it's going to take time before the year over year CPI really comes down. We just have too many of those high numbers that are going to stick around for a few more months. So CPI, some of those things, I think we're headed towards an economic recession, a slowdown. I think stocks are expensively priced, historically speaking, and so forth. There's a lot of longer term headwinds. So, as I kind of talk, I spit out all these bearish things, and then I say, well, I think we're rallying, though, a little bit further here in the short term. I do, but I think keep in mind we're in a bear market, so don't get too crazy on the upside. We're swimming a little bit against the river, right? The river's flowing down long term. We're just trying to swim up for a little period of time carefully and cautiously and then play this back to the downside. QQQ, I think upper end of the range is probably another little retest here. And then ultimately we get lower lows in the coming months, let's call it. On the heat map, again, today, Google lagged, Microsoft lagged, Apple lagged. Really bad day for Tesla, and Amazon was in the red. So look at the size of these. See how big this square is. That speaks to how important and how big of a weight Apple is in the S&P 500 index. You can fit the entire energy sector into Apple's map here and still have some left over. In other words, if every energy stock is up and Apple's down, the S&P will still be down based on that. That's how big and impactful Apple is to the index, right? Microsoft is huge market cap wise, and the S&P is market cap weighted. So a lot of these companies just don't move the needle from a broader index, but this has been the picture. Most stocks are green. Most stocks are going up. The big names are struggling. What if these big names rally for a couple of weeks? Just a correction, just a bounce back. It's like you stretched out the rubber band and now it kind of bounces back. And these other stocks continue to kind of rally. We get a nice little finishing move in the upside. And that's what I envision. That's kind of what I anticipate is coming. So we are above the 20. We are above the 50. Slope is sideways. You have to give the market some credit in the short term. We are neutral in essence. We're kind of sideways. But I think there's one more push, and it might happen quickly. Might be a couple of weeks of just a big bursting rally. I could envision a scenario where the market's up 2 or 3% on the day. And if we're getting a push and then there's a big up day kind of finishes that off, some big 2-3% rally after we've been running for a few days up here at this level, to me, you've probably, if you spent time with me, you know what I think that is. That is a profit taker signal. That is hey, that's an exhaustion signal. That's an exclamation point at the end of this sentence. It's time to take our money off on the bullish side and, look to put some of that in our pocket, because what comes next is probably another deterioration. So that's what I'm looking for. That's what I think transpires in the coming weeks. Let's look at some bullish and bearish candidates. On the bullish side, I'm going to highlight old school tech. The old tech companies like Juniper and Oracle, these are old. I mean, these were in their heyday 20 years ago when everyone loved trading them, and they traded them, back in the tech bubble and so on. And they've been around forever, and they're slow and predictable and smaller revenue growth. They're just kind of boring companies. But I think that's where there should be outperformance right now. And they, by the way, they are outperforming. On the bearish side, we have a little bit more of a mixed bag, but ARK is highly invested in technology, but these are all the new age technology. These are all the companies that really don't make anything. They don't have any earnings, but they have growth potential. The expectation is that maybe these will be the next Junipers and Oracles and Apples of the world and so on. And I think that's a more bearish segment of the market. So look at Juniper's chart. You basically have kind of stalled out here at a little level of resistance, but notice kind of the characteristics of a little cup and handle type of idea, or you could call it an ascending triangle where we've been climbing. We're struggling a little here. I think there could be an opportunity to buy this for that next push higher. The next chart is even a little bit more bullish, but same type of idea. If you were to do the math on this Oracle chart, what do you see? Well, it's probably going to kind of create a little rounded bottom here in the handle. But basically, the top is around 80, the bottom is around 61, so the cup itself is 19 points. Usually the handle's about 30% of the size of the cup, and 30% of 19 is 570. So if you back off of 80 to the tune of about 570, that puts you at about 74.30, which is exactly where we just went a couple of days ago. Often, just as the cup is kind of rounded, the handle will be rounded, meaning you kind of trade like this down here and then go and break out. So I think it'll be a little choppy here, but work its way back up to 80. That's your short-term, very short-term target, is trying to buy around 74.30-ish and trade it back up to 80. On a break of 80, if you have a couple of months of patience, you could even get all the way towards about 86, would be a little bit bigger upside target. T-Mobile, this stock is broken out, and now we may be leaving this gap open, what we call a breakaway gap. So if you can hold this gap open, I think this stock can just keep working its way higher, and it's a momentum trade. I mean, look at how good this chart is and how it really consolidated here for months. It really was this big consolidation. So this breakout is out of a big resting period and should have plenty of momentum to the upside. On the bearish side, ARK is everything that's kind of wrong with the market. These are stocks that were just priced for perfection. They were overvalued, frankly. We plunged down to this in May and hit this 35 level. We've tried to recover for months on end and failed and came back. We tried to bounce again, and that seems to have failed and come back. And I think the next stop is a push down here towards 30 and maybe even into the 20s. These high growth stocks just are not it. They are just not where the puck is going, right? If you want to skate to where the money's flowing, it doesn't seem to be that area of the market. Brookfield, my word of caution here is that this company reports earnings, I believe, on Thursday. I like the chart setup, the kind of correction up to this old breakdown point, and I think we trade back towards about 37 in that prior low. So the setup is nice, but make sure you're comfortable trading and holding that one through earnings if you get into a bearish trade. And then last but not least, UPS, kind of similar. You had some support here in the 170 range. We broke below that. We're struggling underneath it as we speak. We're at the top end of the range, and I suspect it's going to trade back to the bottom end of the range and through that level in the not too distant future. All right, so our outlook, don't forget, we're still in a longer term bear market. That's important. That's where the longer term expectations continue to lie. We're currently in a correction within a bear market. So we understand we're swimming up in a downward flowing river. We're not going to do it too aggressively. We're going to do it cautiously and carefully and kind of work our way through that. CPI comes out on Thursday. We're going to continue to get midterm elections. It is a little bit of a risk to the markets that the results are disputed, that maybe there's not results in a timely manner and so on. That is a little bit of a possible disruption. And then on earnings reports, we highlighted Brookfield. I think their earnings are on Thursday. Disney's earnings are coming out now as we record this. It has not been trading well. Even today, sold off in a pretty good market. So not super optimistic on that one. Honda reports. Oxy, Trade Desk. I've probably traded Oxy bullishly more than any other stock this year. I've traded that stock to the upside over and over again. I currently don't have a position. If I was going to have a position, it would be bullish, no question. These are energy companies, these oil and gas, they are just printing money. Their revenue growth, their earnings growth, I mean, in some cases, their earnings numbers are coming in hundreds or even thousands of percent higher year over year. The numbers have been stellar. Now, I'm hopeful, probably wishful thinking, I'm hopeful that Oxy trades down. But my guess is, if I had to guess, I'd bet it would trade up and Disney would trade down just based on kind of how they're trading into the event and what those earnings numbers and revenue numbers are likely to be. Energy companies are just reporting stellar numbers. Everyone else, it's kind of a mixed bag with a lot of misses and a lot of disappointments in the markets overall. Hope you enjoyed the market roundup today. Have a great rest of your day, and we will see you next time. Goodbye, everyone.